Hello, viewers. Welcome to the Tech NXS. Today, we're going to talk about a financial concept everyone should know. Do you think paper currency is real money? Wrong. Or think the same about cryptocurrencies? Nope. Without wasting time, let's start today's topic. Let's know about real money. Suppose you live in Europe. You think euro is real money. That's natural. Everyone loves his own identity. But wait, why is currency valid in a region? Because we trust it. We use fiat currencies. The value of this currency entirely depends on the trust we have in it. If we lose this trust, this currency's value will become zero. Only the remaining value will be the cost of paper, the paper at which currency is printed. Paper money covers the small value of money, which is required just to circulate in the market. The major portion of the money is just recorded in bank deposits and accounts in computer systems. The money we have is without intrinsic value. All fiat currencies experiments failed badly. The result of failure was the total loss of the purchasing power of the currency. This situation starts with inflation. When inflation increases, it becomes a kind of hyperinflation. The examples of hyperinflation are assignats in France, 1789-1796, Deutschmark in the Weimar Republic, 1923, Zimbabwean dollar between 2000 and 2008. In all these cases, the value of fiat currency lost in only a few months or years. The world reserve currency US dollar lost 99% of its purchasing power. This loss is from the gold comparison. US authorities are aware of this trend. That's why they are exchanging dollars with tangible assets like gold. This is a major signal of loss to trust in fiat currency and this monetary system. This case is not only with dollars. Globalization and deregulation of the banking sector created such a system in which any one sector can influence badly to banks and currency. Let's take an example of Greece. The major part of the economy is real estate. A fluctuation in real estate prices can cause bankruptcy for many companies. The whole financial system can go bust. This is called systematic risk. Today is a great such risk to all the economies. The purpose of fiat currency was to make trading easy without an economy. It was launched in place of silver and gold currency. It's an easy way to exchange a fixed value in return for a commodity. Paper money, metal-based coinage, is just government-issued debt. It does not fit the definition of real money. On the other hand, gold and silver fits the historical definition of money. These metals were used as a currency for thousands of years. Silver as a currency can be used in a crisis. Also, silver is feasible to use for day-to-day living. Gold can be used as a prominent precious metal currency worldwide for international trade. Silver is easily divisible. It can be used as a lower price entry. The cost-effectiveness of silver made it easy to use 90% of coins in the pre-1965 United States. The typical silver to gold pricing ratio is 50 to 1. The price ratio has changed from 78.60 to 83.29 to 1 in the past 30 days. Generally, the market considers silver value low. The market and world give more importance to gold. The market is uncertain that the price of gold crossed the barrier of $1,250. But markets do not take silver seriously, although it has strong fundamentals. If you have a lot of wealth in dollars, it's time to convert some of your cash to silver. If you do trading, this time fits you to consider selling some gold and buying silver. But leave some gold alone in a reserve. Gold has at all times remained real wealth as well as being a medium of exchange. Old money always maintained the standard of wealth in gold. Specific qualities of gold made it probable the safest and most attractive investment for storage and wealth preservation. The foundation of the wealth pyramid for high net worth individuals should be gold stored outside of the banking system. So, gold and silver traded on a daily basis is not an asset. Gold always remained an excellent and valuable investment. Gold appreciates during periods of high inflation and financial instability. Gold cannot be printed to finance the deficit spendings of governments as it has limited supply. Gold is crucial against both inflation and deflation. Liquid nature. Gold and silver have liquid nature. It means they are easily exchangeable. They can be traded, bartered with, or sold for non-monetary currencies issued by the government. Such an exchange is not possible with fiat currency. Consistency. Gold and silver are consistent. It means that gold and silver are easy to recognize. Their appearance and composition do not change ever. This reality ensures the purity of these metals, and the chances of fraudulent activities are very rare. It's not easy for anyone to change the real gold and silver from real to fake. Divisible. Gold and silver are easily divisible. Smaller or larger units of these metals are proportional in value. Other tangible items lack this characteristic. For these precious metals, smaller units are available which measure with perfectness. Convenient. Gold and silver are convenient to use. The reason is that even a smaller unit of these metals has its value. Like even 1 milligram of gold or smaller unit of it has its worth and value. These metals are easy to carry and transport. These metals are precious, so a small amount of these metals equals to a lot of currency. In this way, we can easily carry them wherever we want. Durable. These two metals are durable. These metals are not biodegradable, so these are safe even kept in soil. They cannot evaporate under normal conditions, so they cannot disappear without a trace left behind. This case is not with other forms of so-called money. Like currency notes can burn with fire easily. Finite. Gold and silver are naturally occurring metals. They cannot be created on a whim. Their process of formation is not available. We find only limited resources for their occurrence, so both the metals are finite. But paper is present on Earth in infinite quantity. Currency can be printed on the available paper without the limit. For precious metals, there are limited resources. Also, all these resources are not accessible. In this way, accessible precious metals are very limited in amount. There is a principle to estimate the value of gold and silver which is based on a fact. The fact is that gold and silver are real money. Many people consider paper currency is money. Their views are wrong. The paper currency is just like fiat currency. Chris Mack, president of Trade Placer, says, the average life expectancy for a fiat currency is 27 years. Gold and silver are real money. All the countries use these metals as money for 5,000 years. This is a difference between currency and money. Currency loses purchasing power as the currency issuer prints more currency. But money like gold and silver never lose purchasing power. Although there may be a fluctuation for a shorter interval of time, no one can print even 1 ounce of these metals. There is a method to evaluate the monetary value of gold. According to this method, total gold reserve is a backup of the money supply. Different money supply data and gold reserve data is collected and paired, and then the money value of gold is calculated. For example, the money value of gold in Canada is $13,000 per ounce in Canadian. Silver's monetary value is higher than gold. The reason for the higher value is that silver is rarer than gold for all kinds of reserve data. The future price trend of gold and silver will be moving from current to the actual value. Comparing the current price and the value of these two metals, we conclude that future price trending will go up. So we should buy silver and gold at the current price. The current RPMV, gold around 10%, is the third opportunity in 70 years. It looks difficult to find opportunities for more than 3 times. History tells us on limited times that any fiat currency becomes useless, paper at the end. No fiat currency lasts forever. No matter will there be a chance of gold and silver money again. But one thing is sure, all fiat currencies will eventually fail, but gold and silver will hold purchasing power forever. The dip in prices of gold come from reports that Russia granted regulatory approval to a vaccine to control COVID-19. If the COVID situation worsens, or there is a second wave of coronavirus, then gold is expected to rise in value. You might be thinking, why are only gold and silver money, no other metals? The answer is here in a fact. There are 4 characteristics required to use an element as money. First, it cannot be gas. The reason behind this is that we cannot use gas as a medium of exchange. Second, it cannot be reactive or corrosive. In this way, sodium, iron, and many other metals cannot be used as money. Third, we cannot use radioactive metals for money. Radioactive metals cannot be used openly, and also money will radiate away for nothing. Fourth and final, the most important, metal must be rare but not too rare. Some of the elements fulfilling the first 3 characteristics are very common or very rare. This thing left behind only 2 elements that are gold and silver. Both metals, silver and gold, are solid, non-reactive, malleable. They can be easily shaped and reshaped and have all the other required properties of money. We may see a further dip in prices of gold and silver, but the overall trend remains positive for physical gold and digital gold. Would you like to store so-called currency or real money?